Welcome to Share Talk, the only podcast where investors come first.
Hi, this is Zach Meir with an extended Bulletin Board Heroes on Thursday, the 9th of April here on Share Talk and sponsored by the UK Investor Show. Starting off with the AA, which is not normally in the remit of this kind of charting, but so many people seem to be obsessed by the stock at the moment. It's worth taking a look. We finally broke the resistance line there from March around 17 pence during the session, and at least while we're above that, we've got a retest, and we've had a retest of recent 20 pence resistance. But breaking 20 would take us up towards the top of that late March trend channel as high as 27 pence. So let's see whether the mania regarding the shares is actually justified or not. On to a very Scottish sounding stock, Braveheart. Here we can see that shares, I'm sort of stalking this for a couple of days. Shares have broken that late March 12 pence peak, intraday peak, and above that looking for an extended move here. We're likely in the run up to a golden cross between the 50 and 200-day moving averages over the next few weeks, and that could take the shares up as high as that line of resistance from the latter part of 2017 at 23 pence. Stop loss at this stage back below the 200-day line at 10.65 on the mid there. On to a stock which I cover quite regularly. I suppose the surprise here for Big Dish in the recent past is the degree of the rebound that we've had from the lowest levels towards what's that, around the 0.6 pence area at the lowest, 0.6 pence at the lowest. The interesting part now is the way that we're filling the gap on the way down from which was up to 1.43 pence. End of day or end of week close above that could give the shares another push to the upside, perhaps as high as the 50-day moving average at 2.26 pence at the moment. Stop loss on the bull argument currently, I suppose 1 to 1.1 pence would do the trick. Onto a stock which is rather more obscure. Deepamatter is the next contender. Here we've had a gap above the 50-day moving average, the second gap so far this month, second unfilled gap to the upside, which normally indicates a degree of strength. As far as what the upside here may be, above the 50-day line, looking for a move towards the May resistance line projection from last year up towards 5 pence, which is also obviously would retest the initial resistance of last year and hit the top of that broadening triangle that I've just drawn. If you're cautious on the shares, maybe at this point wait for an end of day, end of week close above the 200-day line at 2.43 pence. A couple of days ago I covered Mobile Tornado, suggesting that we could be, after a bear trap, we could be ready to push higher. So we've had the bear trap rebound now back above the 3 pence level and also the 50-day line. While we maintain above the 50-day line, looking for a target as high as 6 pence, which is the top of a broadening triangle from the middle of 2017. Been stalking Motif Bio for quite a while now. Obviously the chart doesn't look great, and those who don't like falling knives should probably stay away from it, but just worth noting the current setup here, that we've broken a line of resistance on the daily chart from back in December. That was broken at the beginning of the month, so basically around the 0.05 pence level. A break of the 50-day line probably is the best trigger at this stage at 0.1 pence, and if we can do that, then the pathway towards 0.2 and form a February resistance could be seen for the shares. Bit of a lap of honour here on N4 Pharma with the sharp. Well, I suppose we had the spike at the end of last month, but nice rebound here for above the 200-day moving average at 3.6 pence, and above that we're looking to fully or partially or fully retest that spike from last month. Great bear trap rebound from below 2.5 pence for the bulls on that particular situation. On to another stock which has done well in the recent past, covered here on the 2nd of April around the 8.7 pence level. We've hit 24 pence intraday today. The view at this stage is that at least while we hold above the old January resistance at 16.5 pence, we could retest that 24 pence intraday peak over the next few weeks. But what a great move we've seen on that particular stock. On to Open Orphan, which has been a bit frustrating of late, but shares currently looking rather more sprightly than they have done in a couple of weeks. Bounce off the 50-day moving average at 6 pence, and above that, looking for a top of broadening triangle target over the next month or so, up towards the 10 pence level. It's been a rather difficult chart to fathom given the lack of historical data, but it looks as though it's in that broadening triangle, and at least a decent end of day close above 7 pence should take the shares onto that particular target. Covered Tech Capital a while ago. It's well worth following it up now. It's been a bit of a rocky ride. Situation, I think it was covered below that 10 pence area. But the situation now is that we've broken out very, very nicely indeed over the last couple of days, and really the early issue now is trying to work out how far the stock could rise. Best case scenario at this stage, probably up towards 25 pence, which is that November 2018 resistance line projection. So after a very long battle for the bulls, they're finally on their way. Touchwood. Ideally, in the meantime, ahead of 25 pence, we don't fall back below, let's say, 12 to 13 pence, which was last April, May, or 1 year resistance on the stock. On to stock which was covered yesterday and has been up as much as 100% so far today, Tiziana Life Sciences. Here we've got a situation where we spiked towards 90 pence at best. The bull argument still very much on while we hold above that late March spike at 65 pence on an end of day close basis. It would be disappointing, I think, to see sub 60 now, probably after the spike that we've seen and the announcement that came out this morning. Tolu Energy, another stock which is delivered for the bulls. Here we've had a situation where we've hit that trend line target from January, running at 4 pence. We need an end of day or a weekly close back above the 200-day moving average at 4.37 pence to give us the next target, which is November resistance towards 5.5 pence. Just want to finish off with what's been the stock of the year so far, I suppose, which is Novacyt. That's broken the best case scenario target there, which was the top of a rising trend channel from February at, well, I suppose, up to £3.20. The way it moved. I don't want to get people too excited at this stage, but if there is a new target for the stock, it would be towards a line of resistance heading towards 500 to 600 pence. But let's see how the shares perform in the meantime after maybe a bit of consolidation down towards 320, something like that, before going for the next move on this particular stock. That's it from me today. More updates after the Easter break.
Thank you for listening. Remember to visit our website for more news and other podcasts at www.share-talk.com.